Before we get started, I just want to make a reminder to everybody that the information discussed today is not to be interpreted or construed as investment advice. Everyone's financial situation, goals, and objectives are different. Please consult investment advice.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 17. As always, joined by the three amigos. We got the Tom Brady of Macro, Rich Diaz with Acorn Macro Consulting, and we've got Keith Dicker, everyone's favorite boomer, in his dad's sweater today with Ice Cap Asset Management. Welcome back to the show, gentlemen. As always, a little preface here before we jump into the show. All we ask as we pump out this content free of charge is that you send this podcast to at least one person. We are trying to continue to build the community here. And as we're going to get into it, I think this community and this awareness of this podcast is exactly what Canada needs. So appreciate your support on that, because I think we should, being a Canadian podcast, I think we naturally have to discuss our unacceptable views, which is what's happening in Ottawa right now, because this is getting notoriety all across the world. What's happening in the Ottawa with the truckers and this whole movement, because I really want to touch on the bigger theme of this, not like your political leanings. I don't really care if you're left, you're right, you're liberal, you're conservative. I think what's important to take away here is what this movement is kind of showing and what it's alluding to, because I think this kind of comes down to the bigger picture, which is we have a societal rift today. We have a very widening wealth inequality, which has been exacerbated over the past 24 months through successive monetary manipulation. And I think that society in Canada is fractured and around the world. And I think that this is really what this sort of movement is all about. Yeah, you can throw in vaccine mandates and all that, but I think that there's just a cohort of society that is upset. And this kind of goes back to, Neil Howe's great book, The Fourth Turning, which really talks about, again, societies. You go back through history, societies go through these patterns where basically you kind of have the spring market and things are good, and then as things society starts to go through these changes, you get what's called the fourth turning, which is basically we tear down our existing institutions. People lose faith in the authority and in the institutions, and we end up going through a lot of sort of turmoil and volatility. So Rich, I don't know if you want to comment first, but how are you looking at this from the bigger, large macro picture?
I think I'm surprised it sort of hasn't happened earlier. And I'm actually kind of happy it finally did. If I had a truck and I didn't have to write research every week, I'd probably be out there with them. Sorry to say, but I think it's also important. Yeah, an acceptable view. I think it's also important to realize that it's something we touched on. I think it's a function of the hubris that I think a lot of the leaders, both from an economic and financial market standpoint and a health policy standpoint, are exhibiting. The hubris, there's a certain arrogance in the face of sort of overwhelming evidence that their decisions have caused not irreparable harm, but significant harm, deep scarring, whether it's economic scarring or political scarring. The idea that I just have yet to hear a politician that's been in charge say, you know what, we screwed up. Here's how we screwed up. Here's how we're going to get better. And I just think, in most walks of life, I think you have to apologize, admit that some wrongdoing, admit some culpability, and then adjust and change direction and pivot. And I think the earlier and more sincere you are in that apology, or sort of admission that what you've done is either not appropriate or has seen over time in hindsight to be seen to the wrong decision. I think the faster and more honest you do that, the more people forgive you. And we've seen the exact opposite. And so I'll pass it over to Keith, but I think I think that the Convoy speaks to that. We know a lot more about this virus. We know now than we did 2 years ago. We know a lot more about the reaction to this virus, whether it's fiscal or monetary policy. And we know the negative externalities that the decisions as a function of those decisions. And we know that there's been really some bad, some horrible results really as a function of that. And yet the pushing on this view that there's only one way to do it and it's their way or the highway. And anyone who disagrees is, dare I say it, a racist or whatever, I think is, or anti-science, I think is a horrific way to run a central bank, run a government. And I agree with you, Steve. I think that they are related. I don't know, Keith, if you have a.
Yeah, I think this is one of it's a real interesting moment in time. So I like to talk about how we're the world right now over the last 10 years, and it increases. It's escalating every year. That we're seeing this collision across, say, like monetary, fiscal, economic, social, and political factors. Everything is sort of hitting each other one after the other. And then, we, of course, the pandemic started a couple of years ago. But for this specific event or moment or experience, whatever we're calling it right now. So I break it down to, we look at the timing of it. So Rich, you say you would have liked to seen it earlier during the pandemic. I don't think this would have worked earlier in the pandemic. I think right now, around the world, people have become, fatigued with COVID. They're starting to, increasingly more people are agreeing that, what, all the policies and responses we had in place, maybe they're not all quite right. So we're increasingly now starting to see more and more countries, and even here in Canada, which we'll talk about as well, how that's starting to. So I think the timing is very interesting. It's perfect for this. If this happened a year ago, it would have been flat. Is I think, Steve, that you mentioned this is, we're getting a global response to this. So even the Americans now, they're trying to organize their own, march to DC, which I'm sure will be interesting as well. Just as an aside, Canadians, like, we're really proud. We're proud guys. We are. If anything happens, they were with Canada attached on it. We wear it with pride. So there is actually, there's a sense of pride for Canadians that, hey, we started this global movement. But yet domestically, there's a pretty big divide on who's actually supporting it and who isn't, which we'll talk about as well. Financial markets, we'll go into that. So and I'm an investment manager. That's what I do all the time. I always try to be very objective and pragmatic about things. At this point in time, this is having zero impact on financial markets. There might be hope that it will or it won't, whatever. But as of right now, it's not affecting financial markets. The only effect it would have is if it would lead to political change, and we'll talk about that as well. The other thing is, I think you touched on a little bit, the media. We'll talk about that and how this is being sold to people, depending on where you're getting your news from. People will have a very strong view on this, one way or the other. But the main point that I want to touch on here, and people need to understand how politics works. It's not so Trudeau in this case, or the leader of any other province or state or country, whenever a crisis begins, their response is never what the response is, hey, what's right here? Let's just do what's right. Those days are out the window. That, I don't know if it's ever happened, but it's not happening today. Forget about that. Instead, what would have happened here, Trudeau would have sat down with his team, whoever's pulling the strings on telling him what to do, what not to do. And by the way, if people are not aware, this is not just an internal Canadian team. There's some pretty big international push or pull or assistance happening here in Ottawa.
Unacceptable view.
It's not the Russians either, guys. It's not the Russians either. However, but what happens though, they'll sit down, they say, hey, look, we got thousands of people marching on Ottawa. This is what they're doing. our view has to be against them. We have to go with that because politically, that's what our base wants. Because if Trudeau went the other direction and started engaging this group or supporting them, say, you know what, that's a good point. Why don't we change this? He's going to lose so much support internally, whoever's supporting him financially, as well as politically. I mean, all that goes out the window. So his response, even though it may not seem, very Canadian-like, and I heard some people say, "Hey, you just go and have a cup of coffee with these guys and chat with them." No way, like that's not going to happen. But that's the way these things play out. And then we got the media side, but of course, we know, depending on which side you're listening to, if you're listening to the CBC, for example, this is like the Vikings, like they're storming through the city, they're plundering and all pillaging and all that stuff. And if you listen to, say, the National Post, no, like they're planting trees and flowers on the way in. And I happen to think, it's not directly in the middle of that. There's a few bad apples, every basket out there, but it's not this like awful society eating machine that's coming through. Anyway, that's just the first sort of initial thoughts here. I know I probably touched a lot of it, but Steve, what are you hearing on your side?
No, I mean, I think the biggest thing is and part of the whole reason why we had this podcast is just the platform. It's the outlet to have these kind of conversations, because you really can't have these conversations really in public anymore, right? So it's like, if you go against, the mainstream narrative and God forbid say, oh, I might support, or I might be kind of okay with, a trucking convoy to Ottawa, the thought police basically come to your house and knock on the door and basically sort of scorn you. And so that's kind of my concern, is that you're kind of going down the slippery slope, right? It's like it's like the cancel culture thing. It's like you can't have a thought that doesn't fit with the narrative that's being pushed down to you from up top. And so that's really my concern, is, again, like everybody, like let's make no mistake here, everyone on the show is fully vaccinated. No one's here as an anti-vaxxer. Nobody's a racist on the show. We're just having a simple conversation. Rich has got a booster. I think he's got 5 boosters. It's just a conversation, a dialogue, which unfortunately I think is missing, because everybody is so concerned about getting dogpiled on if they even have a thought that suggests that, hey, maybe these people there aren't such bad people. Maybe they're not all racist. And I think, because, we were talking about this before the show here, before we started recording, like, people have to look at this from the bigger picture. Like, in reality, having pushback and having an opposing view is actually good for a healthy democratic society. Like, imagine if all 100% of Canadians, every single one of them, all of them were vaccinated, nobody resisted, and everybody just took whatever the government was going to tell you at face value and just obeyed. Like, you would just have an authoritarian regime.
We've seen that before. It's the Cultural Revolution in China.
Right.
I mean,
yeah. I mean, that's kind of how I'm looking at it. Again, I'm not to say whether you support them or you don't support them. Like, you kind of need to have opposing views. And, I mean, at least the one thing I like about the finance space, which I'm still enamored with, is that, people that are managing money or putting out like research to help people sort of, manage money, like, at the end of the day, all they care about is like the truth. What is right? What is wrong? I just need to get to the bottom of this. Because at the end of the day, it's like money's on the line. You got skin in the game. You got to keep your emotions out of it. And so I think, like, and that's, again, hopefully what we're trying to do, at least a little bit in this podcast, just have these dialogues, be an outlet for Canadians to at least have, several different views here. And yeah, I mean, that's really my whole thoughts on this, because I do think this is all bigger picture. What does this mean for society, politics? We saw, various members of the Canadian government over the last, more recently and in the past. So, like, there was a bill that they had tried to push through about a year ago, which was going to try to regulate online media platforms in Canada, particularly the people on YouTube, such as myself, where basically, hey, like, if you've got a decent size audience, like, we're going to make sure that, your views essentially align with what we want them to. And so I think it's going down that slippery slope, right? And it's the same people are saying, hey, people that are coming out and supporting, these individuals in Ottawa, if they've got a big audience, they're bad actors. And if they, God forbid, you should have a negative response to any politician online on social media, they want the ability to basically freeze your account. And to me, that's just like, from a societal perspective, that is going down a slippery slope.
So I just want to add, so I think that's really well said, Steve. And I just want to add a couple of things. I think there's also that's like sort of a more philosophical view. I think that there's sort of like a rubber meets the road view, which is a lot of the things that we've been told are just demonstrably untrue. And I think that that's maybe bringing it back down to the trucker convoy, or maybe bringing it down, we talk about inflation a lot. And we just know, given that there's been some time that's elapsed, and Keith's right in the sense, a lot of this pushback wouldn't have been acceptable a year ago. And now we have a situation where the thing of my girlfriend is a scientist, and the beauty about that is that you're constantly learning and you're constantly adding to the knowledge. And that's sort of the challenge and the humility that you have to have and it's the same way in finance, right? One day you think that tech companies are cyclical. 10 years later, you realize, oops, maybe Google is a utility. And I think and you have to change your view as the data adjusts and as sort of reality makes itself clearer. And whether it's the vaccine, we're told the vaccine does not transmit. You can't catch it if you can't get corona if you have the vaccine, and you can't transmit it. Well, that's not true. Or the cloth masks or whatever. And recently, the Johns Hopkins University, very extremely reputable university in the United States, they published a paper on lockdowns and the economic impact of lockdowns, as well as the health impacts of lockdowns. And the reality is, I think we have to just be open to the view, I think, in a kind of a polite, constructive way, that views on whether it's economics or whether it's climate or whether it's COVID or a bunch of different things, or whether it's housing policy, which we'll get to, I'm sure, that that basically authorities and bureaucrats aren't necessarily the panacea. They don't necessarily have all the answers.
Can I just chime in quickly? Because I think there's one thing I wanted to discern, because I've noticed, and there was again some government officials recently on Twitter commenting that, we need to get tech platforms to start fact checking and
regulating.
And fact checking and regulating. It's not everything is 100% factual. For example, I'll give you a very simple example. Is Canadian CPI factually it's 4.8% officially, factually, but is it really? It's almost a little bit subjective. Depends who you ask. Most people will probably tell you inflation's higher than 4.8. So if I come out and say, hey, if I tweet on Twitter that I think inflation's running at double digits, do I get shut down? Because factually, that's actually an incorrect statement. CPI per Stats Canada is 4.8.
It's a really dangerous game. Steve, there already are, I know maybe we're digressing away from our normal sort of conversation, but I think it's really important to discuss. There are plenty of hate laws on the statutes in Canada. There are loads of hate crime laws in Canada, unlike in the US. It's much, much closer to the UK. In the UK, if you say something aggressively in a hateful manner using certain types of language, you'll find yourself in front of a judge. And Canada's much, much closer to that. I'm not a lawyer, we can speak to one, but there are already hate laws in Canada. So this idea that the social media needs to be further regulated, to me, is an extremely nefarious kind of veiled threat, which is, if you don't behave, we're going to go after the people we don't agree with. And then functionally, whether or not you agree with that person or not, I think that, that's a scary proposition. And it's, one day you're going to like the government that's in charge, and the next week you might not. And I think you should be very, very careful about. And the other thing that's really important is you don't have to go on social media. Ricky Gervais had this great bit, people, he would say something online and people would write to him, oh, I hate you, stop saying that. He's like, well, just don't follow me, like you can turn this off. And I think that's just a vital difference. And I think we should be really worried about regulating social media, rather regulating user-generated content, and effectively having a bureaucrat in charge of what people should and shouldn't be allowed to say.
Keith?
Yeah. So what I like about what's happening with the trucker movement, I mentioned earlier, this is not having any effect on things. We also have to take a bit of a bigger picture here. So let's look outside of Canada first. So just a couple of weeks ago over in England, they've effectively announced, you know what, we're going to reduce all of the requirements they've set up for COVID. So whether like wearing a mask in public, you don't have to show an ID anymore if you're vaccinated and things like that. And then the Irish did it soon thereafter. And then the Danes did it, and then the Dutch. So, and the reason those governments over there in power, they did that was because of public pressure. They realized, okay, wow, we're starting to lose this fight. This is now turning. So again, whether you're Bojo or whoever over there, and your inner circle, they're telling you, hey, we need to pivot here, because if we don't, we're going to get booted out. They're going to have you up on the pit. Here in Canada, where that hasn't happened yet, but the potential is you're not going to see, for example, the Trudeau, for example, he's not going to be yanked out of Ottawa or anything like that, out of Parliament. Instead, what would happen? The moment they realize that, hey, the tide is turning, they will do a pivot. The pivot will happen, but it's already happened this week in Canada. So you've seen the news from Saskatchewan? Do you guys see that?
Yep. Can you update us? I mean, people might not be familiar on the show here.
Yeah, sure thing. So in Saskatchewan, what the premier announced is on Feb 28th. I don't know, I'm not an expert on what he announced, but I can just repeat it back to you. At the end of February, they're basically relaxing all of the restrictions that were imposed on the province because of COVID. And that's the first step that you take. So read up on that. We're the first province to do this. Now, at the same time, Quebec has also pivoted. Quebec was remember, they were going down the road where they were going to actually have a tax or a penalty or additional user fee for everyone who wasn't vaccinated. So they've pivoted away from that as well. I'm hearing Ontario and likely Alberta will go in line with Saskatchewan with their reduction of the, I'm missing the right word, restraints, whatever you want to call it, on COVID policies. So that is happening here in Canada. So if this protest is able to maintain itself, it is the dead of winter, guys, in Ottawa. And I have a story for you. So one of my good friends, he was in Ottawa a few years back, living there, and all of his friends told him Ottawa's a great place to raise a family. And he said, I think that's where I want to stay. I said, why? His name is Jason. I said, why would you do that? He said, well, it sounds great. I said, well, it's, the whole downtown core, everyone empties out after 4 o'clock on Friday or whatever. I said, plus the summers are unbelievably hot and the winters are unbelievably cold. You get about 6 months of the year where it's, pleasant for your family. Which, of course, if you think about World War II, the Germans followed the Russians into Stalingrad, right? Stalingrad at the time. In the dead of winter, and they got cut off supply lines. And maybe this isn't a great analogy or anything, but if the truckers are able to maintain the protest and nothing gets crazy for them, and they can survive the weather for the next few months, this could actually be something that would hang on in Ottawa, not just for a few weeks, but like into the spring. And political winds, they can change course pretty dramatically. So as of right now today, it's not set up to have a big change, but don't be shocked if all of a sudden you do see a pivot out there some way. What do you think, Steve?
Well, no, are these trucker? I actually kind of curious. Are these truckers? Is the plan? Are these guys supposed to stay here for like a couple months? Is that the plan?
Well, they're well funded. I think they have, was it 8 or 10 million? I saw that was funded.
I mean, that's pretty wild. I mean, again, like I think Elon Musk was tweeting and donating to them. So,
well, I'm old enough to remember Occupy Wall Street. And living in England, they had, I don't know if you've ever been to London, but in the city of London, there's a building called St. Paul Cathedral, and it's very, very beautiful. I think it's where Princess Diana got married. Anyways, And the Occupy Wall Street, I used to work right off of Ludgate Hill. Names in London, the streets are amazing. And Occupy Wall Street was there for like 6 months. And so we would go and we'd like leave. I'd be wearing my suit and tie, walk, working for an investment firm. It was my story, Keith. And I'd go and I'd walk right through Occupy Wall Street, get my burrito with my suit and tie. I wouldn't tell anybody where I worked or what I did, but they were there for 6 months. And, who knows, anything is possible once the weather gets warmer.
Yeah, I mean, it's a good point, though. It's a good point, guys. I mean, these things can turn. It won't stay the same. So something will change with the protest, and it could be one direction or the other, but nothing stays static. Everything is always moving, and don't ever underestimate the ability of those in power to do something
stupid,
unintelligent, stupid, correct? But just all of a sudden they snapped. They said enough of this, and again, their polling supports them for doing it. But just imagine they do a sweep. Say they sweep in, with the police or military or whatever, to get all this stuff cleaned up. That would be a horrendous mistake, by the way, if they did that, because it'll just create even more support and sympathy and empathy for the group. But anyway, the bottom line is this is going to change.
Well,
and it's moving.
Yeah, I mean, all I was going to say is I still think there's like a silent majority or minority or whatever you want to call it, that of people that like I think internally kind of like support them, but like don't want to say it because they don't want to get like just lambasted on social media and in the public eye. So it's kind of, do you know what I mean? Anyways, again, guys, right, whatever you are, right, meaning right or left, whatever. I don't care what your politics are. We simply just wanted to have sort of the dialogue and conversation here.
Can I add one tiny little story to this? Sorry, 2 stories in one go, but forgive me. I was at a dinner party and every single person to a man is left wing. Okay, man, woman. I was at a dinner party. I'm by far and away the most, let's say, fiscally conservative. Socially, you can do whatever you want. I don't care about that. But fiscally, massively. And to a man, I like brought it up in conversation because I love throwing grenades into lovely dinner parties. And I was shocked by how constructive all the comments were. So I think you're onto something with that silent majority thing, Steve.
Anyway, no, I mean, what else is going on? There's lots going on. I mean, we had conservative leader Aaron O'Toole out because again, I think like you see, if you look at the politics online, right, again, it's like very like the conservatives clearly are going towards, I think, pushing further right, and you've got the liberals, I think, pushing further left, and like that's what I'm talking about. It's like there's almost like no middle ground at this point.
So those words, but wait a second, those words have like sort of lost their meaning. I don't think right wing is, I think that we've sort of lost those left and right meaning of words. I think that what the current Liberal Party's done is very authoritarian. You could make a case for that actually being extremely right wing, what they've decided and told people to do with no pushback and a left and a liberal like John Maynard Keynes, I think, would be horrified by a lot of these government policies. So anyway, sorry, maybe that's
I hear you. We're gonna kill the political talk now because I think you guys have all heard us now for going on 30 minutes about politics, and everybody hates politics. So why
don't we next talk about religion and our insurance policies?
I love it. Keith's always good for at least one joke per show, so there it is. I mean, what else? We've got an update on the housing market here. So some recent data for the Vancouver housing market. We've kind of touched on this briefly on the show before. Inventory as of the end of January, currently sitting at all-time record lows, lowest in over 20 plus years. We've got some preliminary data in the Calgary housing market, which I'm involved in a little bit. Inventory off 35%. Months of inventory in the Calgary housing market down to 1.3. If anyone wants an idea of what that means, having 1.3 months of inventory is indicative of significantly higher prices. So a balanced market would be between 4 to 5 months of supply. So you're down to 1.3 in a Calgary market where prices were flat for 12 years. So the housing sort of bubble or whatever you want to call it is leaking into Alberta as well. We recently had some comments from Peter Rutledge, God bless. He used to be the head of the credit union, used to follow me on Twitter, was promoted to OSFI as the head regulator, and then unfollowed me. So screw you, Peter. But he did say that he was on a podcast recently. Maybe we can get him on the Loonie Hour, saying that he thinks it's quite probable that you'll see a 10 to 20% correction in some of these markets that have seen massive price growth. So kind of curious to hear your thoughts, Keith, in terms of, potential knock-on effects on the market. Like, I'm always like, I don't know. I think there's a naivete around Canadians that, the housing market can just withstand a 10 to 20% correction in certain pockets, and we can just continue on our merry way. It won't impact, people's day-to-day lives. It only brings us back to November pricing. What's the big deal? But I just think this thing has knock-on effects. So if Peter Rutledge at OSFI is correct in that, rates are going to go up a bit and housing froth is going to come off and prices are going to correct 10 to 20%. I don't know what you think, but I have to think there's further knock-on effects here.
I think what we need to do here is consider who he is and who is he speaking for right now. So the goal of and the objective of any regulator is to ensure there's always stability out there. Like, they want you to watch paint dry on the wall and fall asleep. So if he comes out and he says, hey, we can get a 20, 30% correction of housing and it's not going, don't worry about it. He's addressing two concerns here. One is that the housing market could correct. He's saying, yeah, it could happen. But he's saying, hey, don't worry if it happens. So from a financial market perspective, if the housing market corrected 10, 20, 30%, and it took place over a long period of time, then he's right. It won't have an effect. So as you know, like, you can have a stock market, like one of the worst years in the stock market was 2002. So global stocks were down about 20, 22% that year. And it was 0.5% one month, 2% another month. Like, it was torturous because it took just so long to happen. But there was none of these like sudden moments that jolted everything. So to believe that the Canadian housing market, however, can, experience a 20 to 30% drawdown, that won't happen over a slower period of time. Something dramatic would happen in the system. And I keep telling the same story. It'll be from a rate perspective for that to take place. So I think that was the question. Did I miss another part of it?
No, I mean, Rich, I don't know if you have any comments as well.
Yeah, I think my question, my answer is sort of a question. I mean, when you think about trading stocks, there's lots of different bid and asks at every specific, above and below the prevailing price. So if you're trading a stock, call it ABC, and it sells for, the list price is 100. Well, there's actually, there's blocks that want to buy at 102, and there's blocks that want to sell at 98. And, you got the bid ask spread. And because it's so liquid, that price of 100 is in inverted commas a true reflection of what the market feels that stock is worth at a given time on a given day. And Steve, my answer is in the form of a question, which is, I mean, is there anywhere near that much liquidity in the housing market? I think that's the easy answer is probably no. And then can you so when, let's say, the supply kicks on, or people, have trouble with interest rates or whatever, I mean, if you don't have that bid and you don't have the support, the floor to that pricing, isn't it like totally possible that you do, like, the bottom just falls out of the market? I mean, it happened, like, for example, Las Vegas during the 2008 crisis is an extreme example, but if literally no one wants to buy your house, doesn't the price just fall and fall and fall until you finally hit somebody on the way down? I mean,
yeah, I mean, I still think that there's a lot of like knock-on effects just because this thing's gotten so large that, like, if you really like look at the system and how it's kind of playing out. So, like, first and foremost, yeah, like housing markets, when they correct, they tend to be very long and drawn out, right? Because, like, it's unlike a stock, it's like there's not much liquidity. sellers are always extremely reluctant because like there's some emotions behind it. They're like, this is my house. I've lived here for 15 years. If my neighbor sold for 1.5, I'm at least 1.5 minimum, but the market starts to change. So they'll sit on their 1.5 million asking price for 6 months before they cut their price. And so what you tend to see is that sales will just dry up, and that has, knock-on effects, which is okay. I mean, obviously realtors are making less money, mortgage brokers are doing less volume, which typically means there's less new credit being injected into the economy. People's ability to refinance, which obviously we know refinances are driving a huge portion of new housing demand today, because mom and dad have made $1 million in their house. They're refinancing, giving little Johnny $200,000 to go buy a property. So I just think there's a lot of like knock-on impacts, and because you've got so much debt and leverage in the system, I think there's quite a few people, particularly maybe in Vancouver and Toronto, that are relying on prices to go up. And I know certainly for developers, like you look at some of these pro formas, like the numbers don't work. The numbers only work if the market continues to go up. And so I think a lot of those projects just get stalled. So you see housing start to fall off as well. And so I just think, I think because housing is so massive now in Canada, like, I don't know if we can peacefully have a 10 to 20% correction in part of these markets and just kind of move on.
So what you both described as an air pocket, right? So and again, it's very real. And the way that market psychology works with everything, whether we like it or not, people will always value their investment, whether it's their investment portfolio or their house, at their high water mark. So right now, if you value your house at, say it's $1 million, for example, and then all of a sudden, it's just time for you to move. You retired, you want to downsize, whatever, and all of a sudden your head, it's $1 million, and you figure out, my God, I'm only going to get 900 for this, and you're going to say, and that changes my plans completely, and then you don't do the trade. And what maybe like one thing that I know, Rich, you showed us. You showed this indirectly without using these words for. We've shown the percentage of the Canadian economy that's now linked to housing. I think that's what we looked at a while ago. And it might be at close to its all-time high, I think. It moves in waves and everything. But what we're also talking about here is the multiplier effect. And again, it's extremely hard to quantify it, but it's not a one-for-one relationship. So if housing comes down 20, 30%, you get that air pocket. It doesn't mean that there's, $5 billion less in the economy next year. It's 5 billion times this multiplier. So it can get, pretty funny in a hurry. We'll move along here. I'm now taking Steve's control here.
No, I was just going to say, because you were just, I think the natural sort of pivot here is that in order for this to happen, we're looking at rates again. And Keith, I think you wanted to update us on the rate side of things, because we've had some action today, actually, from the Bank of England and the ECB. So why don't you take it away?
Yeah. So we talked about the Bank of Canada last week, and I think the title of the episode was "The World Was Shocked." No, the Bank of Canada shocks the world, but not the Loonie Hour, which I love that title, by the way. Oh, by the way, for our listener here, Rich came up with the name, the Loonie Hour. I remember he had a few different options to choose from, and Steve and I both jumped at the Loonie Hour. That was
they kiboshed the Beaver Lounge, which was my favorite.
It was originally, and then the other suggestion was the Rich Diaz show featuring friends.
That only had one vote, apparently, the Rich Diaz show. So back to it. So this morning, the Brits and the Europeans, their central banks came out. So extremely interesting. The Bank of England, they hiked rates by 0.25%. So they went from 0.25 up to 0.5%. That's where they are.
Scary stuff.
What was really interesting, though, the majority of the committee, remember, everyone, what is it? Not all. What was the Animal Farm quote? Some animals are more important than others, or something. What is that?
Some are more equal than others. We're all animals are equal, but some are more equals than others. Yeah.
Okay. So for the Monetary Policy Committee with the Bank of England, the numbers, there was more people wanting to increase rates by 0.5%, which is extremely interesting. We'll carry that over in a second. However, in the end, it was on 0.25 point. So the Brits now, they've clearly said, hey, we're now hiking. We've done that. We already told you we're going to do it. And we did it. Of course, Bank of Canada, for some reason, did carry through. The Americans are clearly coming up. And by the way, now there's even more chatter for the US Federal Reserve to hike by 50 basis points. So the Americans' next meeting is March 16th, and the Canadians are on March the 2nd. So they're almost aligned here. But then we had the European Central Bank. And
Your favorite.
I love the European Central Bank. It's like you could, do you guys remember that? You guys don't remember the TV show WKRP in Cincinnati? Remember that from?
Is that from the 60s?
So if any listeners don't know what that is, and then you do know, you're on the boomer side. But if you don't know what it is, ask your parents what it was. And it was one of the best shows of all time. It's about this dysfunctional radio station in Cincinnati. And, with Cincinnati going to the Super Bowl, I'm sure they'll get a bit of love now in the week after this weekend. However, the ECB, in my mind, they operate like WKRP in Cincinnati. Like it's a gong show inside. However, it's not really run by monetary professionals. So the head of the ECB, of the European Central Bank, is Christine Lagarde. And she is one of the most professional politicians to ever walk the earth. Like there are some good ones out there. I don't mean good in that they're doing good. I mean, she is a pro. She is exceptionally talented at this. She's made her way through French politics, over to the IMF. And if you remember, do you guys remember how she became leader of the head of the IMF? Rich has his finger up for a point.
I just want to remind everybody she's also convicted of fraud in France.
That's another good point. And these things don't matter, right? That's in a prior political life. Anyway, if you want a good story, try to research how did she become leader of the IMF, and again, that was a political assassination on her predecessor. However, so here she is. She's not a professional central banker. She did not go through the Goldman Sachs school and stuff like that. But she's now the head of the ECB. And I listened to the presser this morning because you never know what's going to happen when the ECB do it. And boy, she can. If you really listen to what she is saying, she is telling everyone what they want to hear. If you are afraid of inflation, and you want to hear that, yeah, they're going to raise rates, she's saying it. If you want to hear that, wow, no, inflation is transitory, we need to keep rates low because if rates rise, they're really going to screw over funding issues, that's in there as well. There's a little bit of something for everyone. So it's always interesting to listen to. But one thing that the ECB did not do today, they clearly signaled, you know what, we're not ready to raise rates yet. We'll be mildly hawkish. We're going to put an end to, and they have an alphabet soup of so many stimulus programs out there. It's really hard to keep track of it all. But that's what they did this morning. And we'll see that there. But that was the ECB.
Keith, have you changed your mind? Have you changed your mind on them basically never raising interest rates ever again?
No, we will not. The only I anticipate the Europeans will only raise rates to protect the currency at some point.
Yeah. Okay.
They're going right now. They've already said, hey, we're last here, except for the Japanese. They won't be raising either. So now we have the Brits, we have the Canadians, the Americans are going to start raising rates. And so that was a pretty big moment here this morning. Oh, by the way, so I just remember a story. So years ago, before the pandemic, and
that's the triple for you guys. This is a special episode.
So you can find this one on YouTube. It's just a classic moment of central bank history. So this is when they started to broadcast the central bank presser, the Q&A afterwards. It was over. And it was a room full of people and everything. And Mario Draghi, he was the head of the ECB then. And, they're at this table and they're answering questions. And out of nowhere, these three ladies come running it down through the center aisle. And they jump up on the desk and expose themselves to support some cause they were doing. And there's a famous picture of Draghi with both hands in the air like this, protect me and save me. But those were the wild, wild west days of central bank pressers. And now they can't happen anymore because everything is done on, Zoom video and stuff like that. But, the Europeans always provide the best potential.
That was Mario Draghi's first boob. I mean, is
Steve
that your-
isn't very good with
There's others.
stories
There's,
yet, Rich.
there's sorry. It's okay. He practiced. He's still got to work on his dad jokes. That's all right.
Is there, you guys, Keith, are you in the view, with the ECB basically, ECB, BOJ, like basically are never moving rates. Is your view that, the US is kind of next and probably Canada at some point? Like, are we all just basically debt zombies trying to keep a system alive?
Yeah, but I mean, again, one thing central banks, they like to be as transparent as possible. So the Americans are 100% raising rates, and so will the Bank of Canada. I mean, again, we felt kind of bad for them last week. They and then they kept saying, "Hey, next meeting we're going to do it." Whereas the Europeans and the Japanese, I'd be shocked. We are headed for some kind of policy change correction for global debt markets. It's coming because no one can tolerate higher rates. We just talked about the Canadian housing market, for example, and we're all sort of tied up with it. So
there's another sort of angle I want to just quickly say. I think what's also interesting is sort of the schism you're seeing geographically. And so I don't know if this is by accident or maybe I'm reading into too much, but basically all the Latin American central banks have raised interest rates. So what do I mean by Latin America? Mexico, I think, has raised rates. I know Colombia just raised by 1%. Brazil's raised by a whole whack, I think 600, 700 basis points. You got some of the other smaller countries in Latin America as well. Let's ignore Argentina. They're just a basket case. But so you've got all Latin America raising rates. And then you've got sort of the middle part of the world. That's, Europe. Forgive me for ignoring Africa here for a minute. They're not doing anything, as we know. And then on sort of the eastern part of the world, you got China's actually cutting rates, and basically all of the major economies in Asia haven't been raising rates at all with any kind of pace, with the exception of South Korea. And so it's actually kind of, I don't know, I'm gonna keep an eye on this, and I'll share the charts if you guys are interested. But it's interesting because there's sort of a geographical schism. I mean, all the countries sort of in the, I don't want to say economic, gravitational pull of America, but certainly geographic area are all raising, and you've got in Asia, they're actually the biggest economies easing, and I just wonder how that's going to play out. It'll be interesting to see.
So one thing, so I'm almost finished writing a new IceCap Global Outlook, so it's coming out very soonish. So the title is called "How Do You Know When a Central Banker is Lying?"
It's a good title. Beat my title.
Unacceptable view.
Do you know the answer?
They're never not lying. I don't know.
We know. Well, you have to read it to find out. There we go. But that should be out. But it's kind of ironic because we're talking about a lot of these things, and one of the most interesting market movements that we've identified now, and Rich, you just brought it up without me cueing you to bring it up. So with the Americans tightening or raising interest rates, and because the Hong Kong dollar and the Chinese yuan, it is pegged to the US monetary policy, all of a sudden the Chinese economy now, they have an external entity that's tightening their monetary policy. So you're at the whim of the Americans with that. At the same time, the Chinese had to cut rates. So they cut rates by 50 basis points, so 0.5%, to try to counteract this. And they're having challenges, with their housing, the real estate market over and stuff like that. Plus, the president of China, he came out and said, "Hey, guys, stop raising rates. You're going to screw over the emerging market world." And as you mentioned, the emerging market world, they're tripping up over themselves to raise rates to try to keep pace with the Americans. And this is the point that we make all the time here. With the Americans tightening, and then you have, the Canadians and Brits are doing as well. That's a lot of the key currencies in the world. It's going to create a very awkward moment coming up for the emerging market space, but especially the Chinese right now. So think about it. They have higher rates going on them. So when rates go up, it means they're going to have to buy more US dollars or sell their local currency to maintain their peg and stuff like that. At the same time, they're trying to cut rates to keep things together domestically. It's like adding sweet sauce and spice sauce to your soup to try to get that balance, and you keep screwing it up, maybe something like that. But we have that coming out though in our next piece, and again, like how do you know a central banker is lying? I think some people know the answer. Their
Rich?
lips are moving. Come on.
Oh. No, I didn't get that one.
That was almost as
guys.
bad as my joke earlier.
Okay, I got nothing else. That's it for me.
But so, I mean, yeah, I mean, in summary, we're in a bit of a shit sandwich, so to speak, where every sort of, country and central bank is trying to figure out what to do here. After
It's not all bad. It's not all bad. I mean, some of the data of the U.S. was actually pretty good. I mean, just because I want to end on a positive note, it's almost Thursday's new Friday and everything. But I think one of the key things was the ISM, which is the Institute of Supply Management. They pump out their PMI, their Purchasing Manager Survey, once a month, the first Tuesday of every month. I can't remember. It's always the first week of every month. And I mean, yes, it fell, which is the headline number. But if you dig deeper, you can see a lot of the supply. Number one, the supply backlogs and the supply constraints are slowly but surely easing, which I think is really important. And the other thing that's really important is the demand is absolutely gangbusters. So this idea that the demand, there was, 6 months ago or a year ago, I remember people saying, well, as soon as all of the stimulus ends and all the transfers to household end, that you'll immediately stop seeing all this demand come through. And I don't think that that's been true. I think that actually the opposites actually sort of happened. The demand sort of feeding on itself. That's just from one perspective at the ISM, but it's a very, very I think it's a very, very good source.
But what's happening on the other side, though, Rich, is that the equivalent Chinese data, like their equivalent PMI data, it's gone the opposite direction. So here we go. We have the Americans.
We're going to fight again. We're going to fight again. That's not at all what I see.
Yeah, but the Americans, well, the data came out, but the Americans are going to tighten, which again, this is more evidence, more data to support them tightening. And here are the Chinese, they're trying to loosen policy domestically, but they're being influenced by the Americans. So again, like we continue to go down this road where the probability of an accident happening in the emerging market world, it's shooting up. It's going up. It doesn't mean it's 100%, but instead of being 10% a year ago, it's now up to like 50%, 65%. And, we continue to head there.
Let me mediate here.
Rich, what you can do, Rich, you can sell all your U.S. energy stocks and buy Chinese
No way.
equities.
Are you kidding? No way.
But you love China.
I've been spectacularly right about this. If you subscribe to my note, you would know about that. And I'm all the way to the bank. But I think but I did, now we're plugging notes here. I did write a note last week called America versus the World, where I think you want to rotate out of the US because I think, China trades at a 10 times price earnings ratio. That doesn't make any sense. They're money, they're going to goose this market like crazy. I think that the world is unlocking. I think the inventory restocking stuff that we talk about all the time, I think that's just kicking off. And if people were really, really worried about growth, I don't think Brent crude oil would be hitting $90 and about to smash through 100 any minute, regardless of what you think about inventories. So I don't know. I push back on this, raising interest rates just completely derails global growth and the world is screwed up. I don't think that's fair at all.
So we've got
another wagon wheel bet.
We've got the.
I'm going to take the S&P for 1 year out as of today. What market today? I'm taking the S&P, and you are long the Chinese.
No, get out of here.
Well, that's what you just said.
No, I'll take global ex-US. Come on, the Japanese yen is trading. No, the Japanese yen is trading at a 20-year low in real effective exchange terms.
I accept it. I accept it. You don't have to support it.
Okay, well, I mean,
I take Vancouver condos. The ultimate hedge.
Kitsilano condo.
All right, one wagon wheel.
The Flying Wedge Pizza Company in Kitsilano.
One wagon wheel. February 3rd. You've got global ex-US. Sorry, I've got global ex-US and you've got USD.
Done.
You guys all heard it here. Okay, so we've got the Tom Brady of macro, Rich Diaz, Uber Bull, and we've got the granddaddy of finance,
Uber Bear.
Keith, Uber Bear, and I'm in the middle not knowing what the hell is going to happen because I read a lot of research notes and to me I feel like everybody's super divided because I keep reading a whole bunch of pieces that are calling for recession calls, and I got other guys talking about the great reopening trade, and this is going to kick off the next big boom. I'm super conflicted. So I don't. I'm
we
gonna
could
say,
still be friends even though we disagree. Isn't that nice?
We should go to Ottawa, guys. Who's going to pick me up?
We'll put a little daffodil in your what is it? Like a dandelion. We can sing Kumbaya.
Well, I think that's a good way to end it there. Hopefully, people made it to the end of the episode and got past our 35-minute rant there about the Canadian trucker convoy and all the politics involved. But like I said, we're hoping that this podcast and platform can continue to be an outlet for creative thoughts. Let's put it that way. Unacceptable views and creative thoughts. Think outside the box. And as always, we appreciate the support. We'll see you next week.